What is up, everybody? Welcome back to another episode of Fed Watch. My name is Ansel, Lindner, and I am joined once again by the one and only CK. How are you doing, CK?
Man, I missed the show, but
Welcome
you
back.
and Nolan held it down. I always appreciate Nolan's commentary, his big picture view of what is happening in macro. But, I think the universe aligned for me to come back at the most action-packed moment possible in Fed Watch. I don't know if this is the biggest show in terms of what's happening in the world or not, but we've covered a lot of crazy events in the past, and the last 2 weeks have really shaped up to be crazy, leading up to yesterday's FOMC meeting.
Yeah, this is probably one of the busiest weeks we've ever covered here on Fed Watch, I think. Obviously, we're getting to this time in the cycle where we're having financial crises, bank failures, all of this stuff, coming back around. What is it, about every 8 to 10 years we're supposed to go through this type of market? And this is the first one. Yeah, this is the first one that Bitcoin has been around, right? Because Bitcoin coming out 2009 and hasn't experienced a full-fledged crisis like this. So it's interesting to see how Bitcoin handles itself, how the powers that be respond to Bitcoin in this time of crisis. I think that's very, very interesting. But yeah, so today we're going to talk about FOMC, couple other central banks, attacks on Bitcoin all over the place, CBDCs, just everything, jam-packed show. So do you have any plugs up front before we get started?
I got to plug the Bitcoin conference. It is shaping up like Bitcoin 2021 to be perfectly situated to be one of the most consequential events of the year. Really, we have Balaji predicting that Bitcoin price is going to 1 million in 90 days. Obviously, that is pretty hyperbolic, but we are seeing, massive stress in the financial system. And here we have, in 56 days, the Bitcoin world is going to be coming together once again in Miami Beach, Florida, to celebrate Bitcoin, to talk about the path forward, the life raft for this crumbling system. So the timing is impeccable. It is perfect timing. I have no idea where Bitcoin price will be then. My assumption is up from here, but who knows? Maybe we'll answer that later today on the show. But yeah, the Bitcoin conference, can't miss it. BM Live, save yourself 10% off and get your ticket today. Ticket prices actually go up at midnight on Friday this week. So ticket prices are going up every single month. We're going to have thousands and thousands of Bitcoiners at the event. Every single company, every single person who is making a difference in the space, who is putting together intellectual arguments for Bitcoin and understanding for Bitcoin, people who are pushing forward literacy across finance, across energy, across all of these elements that are important to Bitcoiners, that we're all coming together at the Bitcoin conference. So don't miss it. May 18th through the 20th, Miami Beach, Florida. Let's do it. Ansel, that's my show. I know you want to talk about your amazing newsletter.
Well, yeah, but before I do that, I just want to say it's pretty awesome, all the companies you guys are bringing together, because a lot of times in these periods where Bitcoin is being attacked, we feel kind of vulnerable as just Bitcoiners out here taking self-custody and all that stuff. But this is not a small movement. Just look at this conference. Look at all the sponsors you guys have. There are the largest, most powerful companies in the world are getting involved with Bitcoin. And that puts this attack by Elizabeth Warren or whoever it is in context. So I think that's great. Yeah, my newsletter, I have a free newsletter. I also have a subscription newsletter. So check out bitcoinandmarkets.com for all of that stuff. That's where you'll find my podcast, my other podcast. So Bitcoin and Markets, we live stream multiple times a week. So like tying this into FedWatch, I did a live reaction to the drop of the FOMC announcement. So if you guys want to get that type of content, you can follow at bitcoinandmarkets.com. Okay, so should we get right into, and guys, like, subscribe, share, comment, all that stuff, wherever you're watching this, get the word out of this show. And as we go into this bull market and we go into the conference, let's get, this information out to the most people that we can. Okay, now I'm done. Should we go into the FOMC?
Let's do it. We have we're front loading with news and videos before we get into charts on this show. So a little bit out of order of what we usually do. But again, so much to talk about. Ansel, let's break down what's happening with the high priests of central banks.
Yeah, so we have here the FOMC statement. And just to lead into this a little bit, they did raise by 25 basis points once again. People probably already know that. The market predicted it. The CME has a Fed Watch tool, and we named our show before they named their tool. But anyways, the market was predicting 80% that they would raise 25 basis points. The Fed pretty much just follows the market. That's what we have been saying on this show for ever and ever. It did not disappoint, and they raised by 25 basis points. There was some interesting changes to their announcement, though. So what you're seeing here is this most recent announcement, and I want to draw your attention to the second paragraph. The U.S. banking system is sound and resilient. Recent developments are likely to result in tighter credit conditions for households and businesses and to weigh on economic activity, hiring, and inflation. The extent to these effects is uncertain. The committee remains highly attentive to inflation risks. And if you go to the next slide, Chris, or next animation here, this is the previous statement. And you can see that second paragraph is completely different. There was no mention of the Russian war at all. They're totally pivoting away from that and putting in this banking system concerns. So I thought that was very interesting. And I highlighted those. Just go ahead to the next two slides there. So highlighting the difference there. Okay, let's get into the next slide. This is the meat of the announcement. So the committee seeks to achieve maximum employment inflation and inflation at a rate of 2% over the longer run. In support of these goals, the committee decided to raise the target range for the Fed funds rate to 4.75% to 5%. Okay, the committee will closely monitor incoming information and assess the implications for monetary policy. The committee anticipates that some additional policy firming may be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. And if you go to the next slide, just comparing last month to this month, can keep going, two more. This is the big change in this sentence. So last month they said the committee anticipates that ongoing increases in the target range will be appropriate in order to attain the stance of monetary policy. But this time they changed it to some additional policy firming. So that was interpreted as very dovish, actually, change from ongoing to just some. That was the big change. Okay, and I think that is all I have here for.
But were you reading their body language, Ansel? That's the question. How about when they did this? Did that say dovish or hawkish?
Oh man, well they used to do that with Alan Greenspan. They used to worry about like what hand he carried his briefcase in if he was looking nervous and stuff. But no, I haven't seen any of that with Powell. I do though. I have reacted to his testimony. Is that what you're commenting on?
No, I'm just messing around. I just think, the more you dig into how finance and how central banking works today, it's just so ridiculous. It's absolutely so ridiculous that this is the foundation of our financial system.
Yeah. Yeah. Well, on the Powell's testimony, I actually did dive into some of their body language, like Elizabeth Warren, after she berates him, she doesn't make eye contact. She looks down. So I was interpreting that. And I was also interpreting that the room seemed happy and jovial. And so I was interpreting some of those type of signs during the testimony, which is interesting to do. But you're right. We're reading the tea leaves for sure.
So I guess just when he says from ongoing to just some in that last paragraph, that change, can you just tease that out for someone who hasn't been paying attention to all of the statements in previous FOMC meetings?
Yeah. So one of the things, people are waiting for the Fed to pause their rate hikes, to say that they're done tightening, because their whole goal of this rate hiking cycle is to crush demand in order to get a hold of quote unquote inflation. And so people are waiting for that to stop, for them to stop, stepping on the necks of the market. And so they interpret all of these little words in their statement to see, oh, how much more do they have? Are they close to being done? Whatever. And so changing that one word from ongoing to some firming may be necessary, that's a big change in anticipating the end of the hiking cycle. Does that break it down?
No, totally. And really because, we have to kind of try to interpret as much as possible from these meetings every single month, trying to go, analyze even the smallest elements of their word choice is absolutely imperative. And I'm kind of curious, Ansel,
Explain.
you've been calling for a pivot for a long time. It's honestly wild because you didn't know which banks were going to fail. You didn't know specifically the duration mismatch that was going to happen. But based on the charts, based on kind of what you were saying and what you've been talking about on this show for months now, you're saying something is going to break here. Someone is going to have to something is going to push it so that they have to stop raising rates. It's been kind of shown in the fact of where these bond yields have been compared to the kind of the bracket or the target of the Fed. Can you just talk about the experience of kind of being confirmed over the last few months? Despite not necessarily knowing the details of what is going to happen internally with the financial system.
Yeah, well, my base case has always been a return to post GFC normal because of the way I interpret the state of the financial system being based on credit. And we're in this massive credit bubble. And there's a deflationary pressure over the economy. And so then I looked at what type of situation could we compare this to. And there's two that I really kind of go back and forth between, and that's post World War II, because that was a supply chain crisis similar to COVID. But 2019 and the repo rumble, I think, is very close to what we're going to experience here in 2022. And so my thought was Powell's MO in 2019, he saw it coming, he paused, then he did a couple cuts prior to the repo rumble. And so I thought, that's his MO. That's the year that I think we're going to be repeating here, and the type of crisis we're going to be repeating. I've seen people say that this is not a solvency crisis. This is a liquidity crisis. Deposits are being drained from these banks. This is a liquidity crisis. And so it's very, very similar to 2019 in this respect. So that's how I kind of forecasted a pause to a pivot and all of that stuff. And it hasn't worked out perfectly, but it's been pretty close to the ideas that have come about, I guess, or the path that we've taken.
So with this bank liquidity issues and solvency issues that have taken place, I know that you've been talking about these with Nolan, but what was your reaction to Silicon Valley Bank? What was your reaction to Signature and Silvergate?
Well, David Bailey called as soon as FTX blew up, and he called Silvergate, and then he called Signature. So it was predictable for people that knew kind of the ins and outs of this industry. I am not as in depth in the banking relationships in this industry as other people, but it's not a surprise that Silvergate failed and Signature had problems. What was surprising was how fast that the Treasury and the Fed came in and just took these banks over. I thought that was, it was very, very fast. They've learned their lesson a little bit from the past, that they can't let this simmer and take half steps. They just went the whole shebang right away, took these banks over. So that was a little bit different, and I was surprised at the speed of that. But that funny you bring that up, because Powell talks about this in the very first clip that we have. Should we roll to the first clip?
Let's do it. We got clips, y'all. Let's read Powell's body language in this clip.
Okay.
Rip it, Chris.
Oh, we're not hearing it.
Sorry, y'all, for a little technical difficulties here.
There we go.
Chair
Here we
Powell,
go.
Gina Smilik from the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit, I know that you've got your internal review coming, but I wonder if you could talk a little bit about what you think happened with oversight at Silicon Valley Bank and whether this suggests that something about regulation and supervision needs to actually change going forward. And I wonder, how can the American people have confidence that there aren't other weaknesses out there in the banking system, given that this one got missed, as you noted?
So let me say what I think happened, and then I'll come to the questions around supervision. So at a basic level, Silicon Valley Bank management failed badly. They grew the bank very quickly. They exposed the bank to significant liquidity risk and interest rate risk, didn't hedge that risk. We now know that supervisors saw these risks and intervened. We know that the public saw all this. We know that SVB experienced an unprecedentedly rapid and massive bank run. So this is a very large group of connected depositors, concentrated group of connected depositors, and a very, very fast run, faster than the historical record would suggest. So as for us, so for our part, we're doing a review of supervision and regulation. My only interest is that we identify what went wrong here. How did this happen is the question. What went wrong? Try to find that. We will find that. And then make an assessment of what are the right policies to put in place so that it doesn't happen again, and then implement those policies. It would be inappropriate for me at this stage to offer my views on what the answers might be. I simply can't do that. Vice Chair Barr is leading this, and I think he's testifying next week. So, but that will be up to him. So that's really where it is. The review is going to be thorough and transparent. It is clear, to your last question, it's clear that we do need to strengthen supervision and regulation. And I assume that there will be recommendations coming out of the report, and I plan on supporting them and supporting their implementation.
Sorry, and the final point, can we feel confident that these weaknesses don't exist elsewhere, given that they got missed at this bank?
These are not weaknesses that are at all broadly through the banking system. This was a bank that was an outlier in terms of both its percentage of uninsured deposits and in terms of its holdings of duration risk. And again, supervisors did get in there, and they were, as you know, obviously, they were on this issue, but nonetheless, this still happened. And so that's really the nature of the the review, is to.
All right. So I thought it was interesting that he didn't use the words contained, like Ben Bernanke famously at the beginning of the great financial crisis, when the mortgage-backed securities were starting to blow up, and he's like, "Oh, it's contained." Powell didn't say that, but it does feel eerily like that, doesn't it? It feels like the start of a crisis that could take. I mean, the great financial crisis took a year and a half, right? So it could take that long to play out. So what were your reactions to that first clip?
Well, I mean, we have someone commenting that he's a good actor in terms of like his acting is definitely sufficient. He's a lawyer. That's something that people need to understand, is that Powell is a lawyer. So of course he's good at acting. And central bankers have been quoted in times of crisis, you must be proficient at lying. So we know that for a fact that there are other institutions that have long duration bonds that they purchased back in 2021 and early 2022 that are in trouble in the solvency perspective if there is a run on them as well, because frankly, a lot of these institutions they're sitting on unrealized losses with these bonds, and if they have to wait for them to, if they cannot wait for them to reach maturity, they'll be selling them at a severe discount. That's what the new Fed window is for them to get, be able to trade those in, get cash, potentially buy new assets that have much higher coupons on them. But ultimately, I think it's pretty clear that Powell and Yellen and everyone involved, they're saying whatever they can to show confidence, to say that this is different than all the other regional small banks. And there are definitely elements of Silicon Valley Bank that are different. They are banking startups, which had a massive liquidity boost in 2020. Those same startups were burning cash after the fact. Those same startups obviously have very large bank accounts, larger than a bank that's focused on individuals. But ultimately, again, when the Fed raises rates over the course of a year so quickly, and banks historically have been buying bonds as safe assets, there's going to be a mismatch. And I believe that there was like a Fed of Kansas City report that Balaji's constantly been referring to from late last year, talking about how banks that were in peculiar situations from a solvency perspective rose from 4 banks to over 300 banks in the US. So, just go check the Fed's own reporting. There are a lot of banks that are in dubious positions.
Yeah, well, what he said there about their duration risk being pretty unique, I kind of believe that, right? But at the same time, the thing that triggered this off, wasn't it Peter Thiel for Silicon Valley Bank? Peter Thiel said, everybody get your money out.
Yeah.
And
So,
so it was,
and on top of that, I've been listening to the All In podcast more regularly with, those VC. It's the biggest podcast in the VC space, but those VCs freaking out about Silicon Valley Bank going down, calling it a startup extinction event, and calling for regulators to step in. But, what they're talking about is, on Wednesday, Thursday, when the panic really kind of got started with Peter Thiel, all these internal circles within Silicon Valley, all these VCs that are connected via text message and group message, they all started, amplifying the same news. And the incentive here is not to keep your money in a bank that's in question, right? The incentive is pull your money out, see what happens. And then if it's all good, then you can put your money back in. That's the incentive. So as soon as there is a scare, it's going to pick up. And then that moved on to First Republic Bank, which is another high net worth individual bank with similar kind of liquidity profile as Silicon Valley Bank. And I know that there was lines out the door 2 weekends ago at First Republic. And now we know that, JP Morgan and US Bank, they're taking massive action to support that balance sheet and to potentially buy the bank altogether.
Yeah, so the duration risk that they didn't hedge was somewhat unique, but also their depositor profile is somewhat unique as well, because like you said, they're all connected. So this First Republic, you said, has the same sort of depositor profile.
High net worth in the Bay Area. Yeah. It's almost like a high concierge, high net worth bank in the Bay Area.
Yeah, and that's one of the problems here is the depositors taking their money out. And that's happening to all these small community banks. And we'll get into that with Yellen here on some of her flip-flopping that she's doing. But we do have one more clip for the FOMC. This is at the end of his press conference. And I thought it was kind of interesting the way this ended. And he said, oh, thank you. And then went off stage abruptly. So let's take a look at this next one.
Curious how you view financial conditions now, and if credit were to tighten enough, if that would prompt a rate cut.
So financial conditions seem to have tightened, and probably by more than the traditional indexes say, because the traditional indexes are focused a lot on rates and equities, and they don't necessarily capture lending conditions. So we think that, though. So there are other measures which if they're focused on, bank lending conditions and things like that, they show some more tightening. The question for us, though, is how significant will that be, and how, what will be the extent of it, and what will be the duration of it? And then, once you know that, there's a fair amount of research about how that with broad uncertainty bands, how that works its way into the economy over what period of time. And so, so we'll be looking to see the first part of that, like how serious is this, and how does it look like it's going to be sustained? And if it is, it could easily have a significant macroeconomic effect, and we would factor that into our policy decisions. I mentioned with rate cuts, rate cuts are not in our base case, so That's all I have to say. So.
Pulling the Joe Biden, scurry off stage before they dig deeper.
Yeah, rate cuts are not their base case, but I just thought that was interesting.
Hey, it's not their base case, but maybe it's become a case that they're considering.
Yeah, and I mean, he had been up there for a while, and so I think he was just done at that moment. And I think he did answer something about rate cuts earlier on, but it doesn't look good because I saw that on Twitter. And people were saying, hey, that, he stormed off the stage at the end here at not wanting to talk about rate cuts. And so, yeah, that definitely doesn't look good. So any overall commentary on Powell before we move on?
I think that we said a lot of it. My analysis is less valuable than your analysis. So I'll give you the closing word on those videos.
Well, I mean, I don't have anything else to add to that. I think the audience a good flavor of what we're thinking, a good flavor of what Jay Powell is thinking about the banking crisis and all of that stuff. And we can move on now to Yellen and what she thinks about the banking crisis. And remember, Yellen was the previous chairman, and now she got moved over to Treasury. She's the Treasury Secretary. If you go to the next slide, Chris, we have this kind of timeline that I put together, very brief. So the Treasury insured all of Silicon Valley Bank and Signature Bank's deposits. And they said, oh, we got all the large banks are fully insured. We will fully insure all the deposits, not just the 250,000, which the FDIC is supposed to cover, but we're going to cover all deposits at the big banks. Well, then a bunch of small banks, it was like 3,000 small banks or something, put together a petition and sent it up and say, wait a second, if you're going to be insuring the deposits at the big banks, all of our depositors are going to go to the big banks, and you're going to extend, you're going to, what's the word I'm looking for? Extend or repeat the same thing that happened at Silicon Valley and Signature and First Republic now. And so then Yellen turned around. She did a 180 on this and said, whoa, now, actually, it was a report from the Wall Street Journal, which I do have a clip from. I thought I had a screenshot. Let's see. No, I don't have a screenshot from that one. But a Wall Street Journal report came out and said Treasury's looking at insuring all deposits. There's $18 trillion of deposits in this country, and that the FDIC only has $125 billion.
That's a lot of Bitcoins of deposits.
So how the hell is the FDIC going to insure all 18 trillion? They can't. All right. Then when this came out that, the United States government was looking at backstopping all deposits in the United States, then Europeans started voicing concerns because they don't have an FDIC. They don't have deposit insurance the way we have, like one centralized deposit insurance. So what would happen there? Just like the small banks are worried about deposits fleeing into the large banks, now the Europeans are worried that their deposits are going to flee over to US banks. People will dump euros and get dollars and put them into US banks. So then the Yellen had to pull another 180. But anyway, in the meantime, right there, Jerome Powell came on, and at the FOMC presser there, he said, all depositors' savings are safe. And then at like 2:35, right after Powell gets done speaking, Yellen goes on to some speech somewhere, and she says that now regulators aren't looking to provide a blanket for deposit insurance. I mean, to me, this is such back and forth, flip-flopping, wish-washy stuff. How in the hell can anybody maintain confidence in this system? CK, what are your thoughts on this?
Bitcoin is a life raft. Honestly, Bitcoin in self-custody is the only money that you actually own. Here's one of the biggest things that I got from listening to the All In podcast and listening to those VCs is they've become acutely aware that in order right now to get any sort of financial services, you have to become a debtor to a bank. You can't just have a dumb checking account. You can't have a virtual vault that gives you banking services. Well, that's what Bitcoin is. Bitcoin is money that's digital that you can actually hold, that you don't need to enter into this creditor-debtor relationship with a financial institution. And ultimately, that's what the majority of people want when they actually put their money in the bank. They don't want to go and analyze the bank's balance sheet. They don't want it. Like, that's what the Fed is for. That's what all of these regional Feds are for, is we are paying taxes so these regulators make sure that these banks are solvent and we can safely use them as a vault, right? But that is not what's actually happening legally. That's not what's happening in practice. And people are waking up to that reality. Bitcoin is the life raft.
Yeah, that's extremely interesting. So the debtor, you have to be a debtor to get financial services. And so Bitcoin would be
or a creditor. Yeah. Like, you put your money in the bank and now you have a creditor relationship with that bank.
Yeah. So it's Bitcoin is disintermediating that relationship, is what they're saying.
Absolutely. Bitcoin disrupts that altogether.
Right. Man, that's fascinating. That is really a good sales pitch and ties into so much of what we're going to be talking about this presidential economic report that came out this week. We're going to touch on some of that stuff. But yeah, that goes deep. So I'll have to think about that. That's pretty profound, actually. All right, let's go into the ECB, because they came out this last week on the 16th, actually, with their monetary policy decision. And they raised 50 basis points, which is what they said they were going to do, or they had been signaling. They raised 50 basis points. And guess what? They have a worse banking crisis than the United States. They had a systemically important bank go under, and they still raised by 50 basis points. I mean, what is going on? What seriously is going on here? These central banks continue to raise when they have an active bank run on. I don't, and you know, the kind of underlying thing that's pushing depositors to take money out, and I put this on my Telegram, was that it's the spread between what you can get in a money market now, because money markets, you know, are based off of interest rates and government securities and stuff. So you can get 5% in a money market, or you can get 1% keeping your deposit at the bank. What are you going to do? You're going to take it out and get that spread. And so deposits are fleeing from banks, and that's the underlying dynamic here. And they keep raising rates. They're making this dynamic even worse. It's unbelievable. But let's go to the next slide. This was a tweet about the ECB and Lagarde. We know that Lagarde puts her foot in her mouth all of the time. But she says, we are neither committed to raise further, nor are we finished with hiking rates. I mean, it's just speaking out of both sides of her mouth. I think that it's crazy. So let's see what else. Next slide, we have the Bank of England. They also are raising rates. They raised rates, I think, on the same day as the Fed did. And they only raised 25 basis points. However, they had already signaled they were done. They had huge inflation numbers come in, or quote unquote inflation numbers come in. So they decided to raise 25 basis points again. It's just going nuts, CK. So what's your take on all of this stuff?
When all you have is a hammer, everything looks like a nail.
That's true.
I mean, we've been talking about the fact that raising rates is not solving supply chain issues. We've been talking about raising rates does not end wars. Raising rates does not change geopolitical outcomes. I mean, it probably affects geopolitical outcomes and influences them, but you know, when all you have is a hammer, when all you can do is destroy demand, theoretically, by crippling the consumer, if you will, then that's all you can do, right? You know, but here we are. This is why being specific with language is important. Why having an appropriate definition for inflation is important. It's still ludicrous that the entire world considers CPI equals inflation when CPI equals prices, and prices are affected by many things, including potentially money printing, but also many things. But it just shows the clown world that is our financial system. And this is why we need Bitcoin. And this is a Nolan term for people who've tuned into Fed Watch the last few weeks, Nolan Bowley coined the term is Bitcoin is money that you can count. That's simply it. Count BTC. You can count the 21 million Bitcoin. You don't have to listen to these clowns who have wish-washy definitions of stuff. And again, you're calling for a pivot. We see these central bankers starting to crumble under the pressure of the system that they are breaking, but while trying to maintain forward guidance or maintain the resemblance of control. And eventually their hand is going to be forced. So I'm very excited to see what the next few FOMC meetings and subsequent central bank actions across the globe look like.
I like that word you use, the semblance of control. I have a question for you then so there's this theory out there that these central planners are all omnipotent and they have this evil plan to take us into a CBDC, to attack Bitcoin, which we'll get into here in a second. But do you buy that? Or, just what the heck is going on with they're raising rates while there's an active banking crisis? Do they know what they're doing? Is there a plan? Is there a broader plan? Or are they just flying by the seat of their pants? CK.
I would say that it is probably some sort of a combination, right? There are strong narratives that influence people, and these, it's a very small circle of people who are having conversations and are semi-coordinated. But at the same time, like you, I don't think that there's like this mastermind conspiracy. I think that it's just people in very difficult positions that have to maintain a extremely top-heavy, unstable system and try to prevent it from completely crumbling. We have both been complimentary of Powell, saying that he's a straight shooter, and generally speaking, we think that he is aligned with the American people. But a friend of mine, Luke Broyles, said, it doesn't matter if Powell's doing a quote-unquote good job because he does not have a good job. His job is bad. And
That's
central
true.
banking is a bad job, and it is not good for economies in the long run. I would say it's somewhere in between. Like, there are narratives, like there's clearly attacks against Bitcoin. There's clearly the desire to maintain control with these large bureaucracies. The incentive is to grow. So, there's some logical next steps to what these things need to do to continue growing. But at the same time, I don't think like there's this mastermind, Rudolph Murdoch,
George Soros.
conspiracy, George Soros conspiracy. I don't think that these people are competent enough in order to like be playing like 340, 5D chess like that.
Yeah, I agree with you. And what happens when you get behind the 8 ball? Then you start, just flailing and going at everything, throwing out attacks this way and that. I've compared it to a drowning man. When a man is drowning, he just grabs at anything and will pull it under with him. So, okay, let's go on to the next topic here, and that is the attacks on Bitcoin. Yeah.
We're running out of time here. We got to get to the charts too.
Oh shit! Yeah. Okay.
No. Let's jump to the attacks on Bitcoin. The letter from the office of the presidency, very directly an attack, and Operation Chokepoint is something that is in our headline here. Ansel, why don't you get us kicked off?
Yeah, so we can just zip through some of these headlines here. So Barney Frank was right about Signature, and this is from the Wall Street Journal. If you go to the next slide, this is, we never thought we'd write that headline, but on Sunday, the Federal Deposit, so the FDIC announced that the New York Community Bank Corp's Flagstar Bank will assume all Signature Bank deposits except for those crypto companies. This confirms Mr. Frank's suspicions that Signature seizure was motivated by regulators' hostility towards crypto. So I was really poo-pooing this idea that they did this against Signature as an attack on Bitcoin, but the more and more it's looking like it was an attack on Bitcoin. So next slide. This is the Coinbase thing, and we have a blog post that they put out. We asked the SEC for reasonable crypto rules for Americans. We got legal threats instead. And you can probably put some color on this, CK, but the Wells notice is just like a notice that they're under investigation and that there are charges coming, and they have 30 days to respond to this. But what was really interesting is that it is very specifically about staking services and listing practices of Coinbase. It has nothing to do with Bitcoin. And the only effect that it has on Bitcoin, I would say, is as an on-ramp, right, to Bitcoin. So what's your take on this Wells thing from the Coinbase?
Well, my former co-host of POV Crypto, David Hoffman, who is an insider with everything that has to do with, the Ethereum and TokenFi space. I don't call it DeFi, I call it TokenFi. It's not decentralized, but there's a token. There's been hundreds of Wells notices going out. And the reality is there are laws in the United States. I'm not saying that they're good laws, but there are laws that exist. And TokenFi and the actions a lot of these onshore and offshore crypto casinos are squarely in violation of pretty clear laws. Yeah. So I'm not trying to say that I support what the SEC is doing. Personally, I think that we should get rid of accredited investor laws. Personally, I think that you should be able to do your own diligence and invest how you want. The SEC is incompetent at protecting consumers, which is why so much pain has been felt. They can only really retroactively, after a massive catastrophe, get more resources to try to scale up to whatever new innovation in the market that they're trying to protect consumers from. But with that being said, this idea of like the US government is attacking the entire intellectual idea behind Bitcoin is completely false. Although I do believe that there are people who are aligned with crypto who are against Bitcoin's proof of work and are trying to use that as an attack vector. Ultimately, I don't think the SEC is actually against Bitcoin, and rather is against what is illegal token sales. And from a PR perspective, a lot of these exchanges, they want to intermix all of that together. They want to say Bitcoin and issuing tokens are the same thing, and it's just frankly not the same thing. So again, nuanced position here. Bitcoin is unique. Servicing Bitcoin is squarely within what is legal inside the United States. The SEC has clear laws that are clearly been broken by the TokenFi space. Crypto is not Bitcoin, but at the same time, because Bitcoin is largely bucketed in with the same service providers as these token service providers, this is definitely going to be a drag on Bitcoin from that perspective, because they're losing these exchanges that provide order books for Bitcoin are losing bank accounts, and they're getting heat for the bad activity that they're doing outside of Bitcoin.
Yeah, well, I think one of the biggest attacks on Bitcoin right now is these people that they want to lump Bitcoin in with crypto. And this is from inside the space. These scammers that are in trouble now, and they're like, wait, we need to all stick together. Why are Bitcoiners so happy that the SEC is coming after us? We need to stick together. Let's have a plan. No, they're attacking Bitcoin. Those people are attacking Bitcoin. They're trying to put Bitcoin in the bucket with their scams. So it's imperative, I believe, that we push back and say, have fun. Have fun with the SEC. We told you for 10 years, no one listened. So I think the biggest attack, well, not the biggest, but this close to the biggest attack right now is from inside of the altcoin space, trying to attach themselves to Bitcoin. And man, I think that's an unpopular opinion, though. What's your take on that?
Yes, I guess in the short run, it's an attack. Ultimately, I think that all of this is good for Bitcoin. Nothing is bad for Bitcoin, because the second and third order effects of this is Bitcoin and Bitcoiners create stronger circular economies. They create more exchanges with bank accounts that are Bitcoin only, and they isolate themselves from this attack vector. Really, if Coinbase and Kraken can't keep a bank account, but River and Swan and Cash App can, that is a pro for Bitcoin, right? So, again, I'm from the school of everything is good for Bitcoin. I'm on record saying that altcoins in the grand scheme of things are good for Bitcoin, because we have to onboard 99.99% of the planet to Bitcoin. And guess what? Fiat-minded people, Bitcoin is counterintuitive to them. So we
Yeah.
need things that incrementally move them closer to Bitcoin. And guess who's closest to Bitcoin maximalists? Unfortunately, it's these shitcoiners, and these ill-advised, greedy shitcoiners are putting on a real attack with Bitcoin, which is trying to attack proof of work specifically, in my opinion.
Yeah. Well, Ethereum is just the hotbed of all attack vectors for Bitcoin. You know, they have the staking. That is the attack that we just read there from Coinbase. They're going after staking, proof of work, against proof of work, and the artificial scarcity argument, which we'll get to right now. So if we go to the next, actually, this is slide number 11, Chris, please. We're going to skip that one. Okay, there we go. Slide number 11 is, this is from the presidential, what was it called? Economic report from the president or something like that, that he just put out the other day. And man, there's 75 references to Bitcoin in this. So I tried to pick out something that was the most broad that we could talk about. And this is summing up the chapter on Bitcoin. I believe it's chapter 8. And I'll just read this out here. This chapter primarily examines crypto assets whose proponents have been relearning the lessons from previous financial crises the hard way. In addition to the decentralized custody and control of money, it has been argued that crypto assets may provide other benefits, such as improving payment systems, increasing financial inclusion, and creating mechanisms for the distribution of intellectual property and financial value that bypass intermediaries that extract value from both the provider and the recipient. Looking under the hood at these arguments, however, shows a more complicated picture. So far, crypto assets have brought none of these benefits. Meanwhile, the costs generated by several of these aspects, such as those for consumers, the physical environment, and the financial system, are not only substantial, but are also being accrued in the present. Indeed, crypto assets to date do not appear to offer investments with any fundamental value, nor do they act as an effective alternative to fiat money, improve financial inclusion, or make payments more efficient. Instead, their innovation has been mostly about creating artificial scarcity in order to support crypto asset prices, and many of them have no fundamental value. This raises the question that the role of the regulation in protecting consumers, investors, and the rest of the financial system, and my face is over the rest of it. But then they talk about, hey, there is DLT, and maybe the government can make something out of this technology. I wanted to point out here, artificial scarcity, ultrasound money. This goes back to Ethereum. Ethereum has showed the way for how the government can rhetorically attack this space. So, CK, go. What's your reaction?
Everything is good for Bitcoin. Again, there's a lot of confusion. Of course, the government is going to say, it's kind of like this hilarious meme, which is like blockchain, not Bitcoin, has evolved to crypto, not Bitcoin, which has evolved to CBDC, not Bitcoin. So there's like this escalation of cope until people actually realize that Bitcoin is the thing. So, people are still on this spectrum of DLC, blockchain, not Bitcoin, crypto, not Bitcoin, CBDC, not Bitcoin. And ultimately, they're on this journey to realizing, no, Bitcoin is actually it. Yeah, I mean, obviously, it's unfortunate that the staffers associated with the White House have taken such an idiotic and uneducated position here, and that the president is putting a rubber stamp on it. But ultimately, I don't really expect too much from this White House. So Not surprised. This aligns very well with their political motivations. And if you look at the banking system today and you look at the promise of CBDCs, this White House is not aligned with what's best for the American people. It's not aligned with American values of freedom, of sovereignty, of open markets. So, my perspective is I'm fundamentally aligned with American values of freedom, and Bitcoin is fundamentally aligned with that. So it is very showing that this White House has once again confirmed that they are not aligned.
Yeah, absolutely. Well, this report did, like I said, they mentioned Bitcoin 75 times. They did a pretty good job on the technical aspects and describing Bitcoin, but they still, like you say, have a long way to go. So if we go to the next slide, this is one that has been floating around Twitter, and they talk about proof of stake. So despite Ethereum's switch to proof of stake, Bitcoin has not announced plans to make any similar change. And that just obviously goes to show they don't understand decentralization. CK.
I mean, call the CEO of Bitcoin. Where's he at? We need to get the upgrade in.
Yeah, and
I do think pressure on developers is going to be a big thing. And, let's rewind to right now in the Bitcoin development space. There is an attack on developers. Craig Wright and his cronies are attacking developers and forcing many key developers that are public facing to put up their hands and say, I'm quitting, so that way they can relieve themselves of that attack. And there's suspicion that a lot of these developers are actually just coming back pseudonymously.
Yeah.
Right. With a new pseudonym. And I think that is an example of Bitcoin being anti-fragile. What does not kill Bitcoin's development is actually going to make Bitcoin's developer base stronger, because there's less publicly known developers that can be pressured by the US government and the likes of it to do whatever change that they want to see on the network.
Great points, man. And I will just also put in this quote here, again, they're getting all these rhetorical attacks from Ethereum. Ethereum has, had to compete against Bitcoin for how many years? And now the government's starting to come after us. They learned how to attack Bitcoin by looking at how the altcoins have attacked Bitcoin. So I think it's just very interesting. But that's all I have for this. You ready for charts? We got 7 minutes.
Yeah, let's get into it before Chris kisses us out.
Okay. Chris, if we get the next slide, there we go. That's the Bitcoin daily. And I did take this about an hour ago. It was moving pretty rapidly, so I don't know where it is at the current time. But as you can see, we broke down out of that pattern, those kind of black lines, horizontal black lines that I have, but we bounced perfectly on the 200-day and rallied almost 50%, which is pretty crazy. So CK, what are your thoughts on the Bitcoin daily chart here?
Yeah, I'm on the Bitcoin Magazine extension here, so you can get that for the Chrome App Store. We got the USD price, we got the block height, we got the average transaction fee, we got a lot of other cool little metrics here. But Bitcoin is a $550 billion asset, a little bit more than halfway to back to $1 trillion. And yeah, at $28,400, give or take, I've been very impressed by, Bitcoin's positive reaction to really the sell the news event that was yesterday with the FOMC meeting and raising rates, and Bitcoin really holding the gains that it had kind of throughout this banking crisis.
Absolutely. Let's go to the next slide. This is the weekly chart, and oh, wait, let's go to the next one. I have my cartoons on that one. All right, here we go. Here's the weekly slide. No,
we're here for the cartoons, man.
Yeah,
we're here for the cartoons.
So this is this is the resistance that we're facing right now. Kind of, you can see on the pattern, it goes back to the lows in 2021. Then that kind of plateau that we hit right before Celsius. So after Terra Luna, before Celsius, and before FTX, that's where we're at right now. But once we break out of that, if you go back now, Chris, to the next slide, or to the previous one there we go. Once we get past this red thing here, we got clear skies above, and man, we can move very quickly. Any thoughts here on the weekly chart, CK?
I mean, it's hilarious that there's a death cross, and yet we're pretty much flying off of that. So a little bit inverse of what you would expect there, but yeah, I mean, you've been calling this the whole time. So I would say I will continue to take your analysis very seriously, and we'll see how much longer you can keep up the winning streak.
All right, let's go to slide number 16. This is the Ethereum chart, and I just want to, rag on Ethereum here a little bit, since they showed the government the way to attack Bitcoin. So this is from the merge and their creation of ultrasound money. It has just been down very recently. Okay, so that's all I got for Ethereum. Next slide is number.
Wait, hey, let me just
Yeah,
talk
go.
about this. I've been in Bitcoin for 5 years now. That's about half as long as Ansel. But the reality is, in Bitcoin and in crypto and in this clown world market, almost everything is sell the news. Almost everything. And this chart just shows the best trade that you could have made here is selling the news on the merge.
Absolutely. Yeah, that was the pre hard fork pump. You see that all the time in Ethereum. So when they got to get their next hard fork going. Is that Shanghai or whatever their next one is? They got to get that going.
They need to enable withdrawals from staking, and I can't imagine that that's very good for the synthetic scarcity of Ethereum.
No, when they do that, it's everyone's going to be selling. Okay, this is kind of going off of one of your favorite charts that we talk about here, CK, and this is the rates, different duration treasuries against the Fed funds, and you can see the stair-step function of raising rates. But most recently, everything has been diving. It started diving. The peak was back probably around Signature Bank era. After the Silicon Valley Bank, I think, right? Then we had Signature a couple days later. That was the peak, and it's been down ever since. And it's not listening to the Fed's rate hikes here. Next slide. It even goes into the 1 month. So you can see the 1 month versus the Fed funds right here. It's way below. I mean, this is significantly below. If the Fed funds rate is 4.75% now, the bottom, this is right around 4%. That is a very significant difference. I mean, why would you go and get a 1 month treasury bill if you can go to reverse repo and get 80 basis points more? There's no reason other than there's a huge amount of demand for safe and liquid assets. Let's keep going on the charts. You can stop me whenever, CK. So next one is the stock market. And I mean, if you just read the headlines and you see all that's going on with these bank failures and Powell and the flip-flopping from Janet Yellen and all of this, yet we still have higher highs and higher lows on the S&P 500, recovered already today from yesterday's drop. And, not much. This does not look like imminent doom is coming. And the last slide I have is the dollar. We'll end on this one, CK. The dollar is dipping, but it's still above where it was just at the beginning of February. We'll see if this continues. Let's do the next slide, because I zoom out and I show, one more, Chris. This one shows the long-term, multi-decade of the dollar. The dollar is going higher. There's no sign that the dollar is weakening in the long term, maybe in the very short term of the last few months, but overall, the dollar is continuing to strengthen, which goes into a deflationary narrative and a deflationary hedge for Bitcoin being a deflationary hedge. And that's all I have, CK. Any comments on the charts?
One of the main thesis of this show is that there's only two monetary assets that matter, and that's the dollar and Bitcoin. So first it's hyper-dollarization, then it's hyper-Bitcoinization. So I think that these charts show that bullish on Bitcoin at this point. We've been ripping it for an hour. Producer saying we got to jump off. Ansel, this was an action-packed and great show. Thank you so much for preparing such a great presentation. Everyone, come meet Ansel and I in person at the Bitcoin conference. I hope to be lucky enough to share the stage with you on our news desk at some point during the event. And for all the attendees, it's a must be at the most consequential event of the year. And y'all, tune in next week. We're going to be coming back with more updates. We're watching the Fed here and keeping track of everything that's happening in macro. So this is the best macro show in Bitcoin. Thanks so much for watching. Peace.